Hey everyone. Palantir CFO had a lot to say about what's happening at the company, and I think explains a lot about why everyone is talking about Palantir stock right now. So I wanted to share with you the things that I thought were so important that Palantir CFO said. So let's begin. Starting with saying, the first quarter of 2023 was a record setting quarter for us, right? On the back of those exceptional results and this trajectory, we now expect to be GAAP profitable in each quarter this year. That's remarkable considering that the quarter before this one was the first one Palantir had a profitable quarter on the bottom line. Now they're saying that every quarter in this year is going to be profitable on the bottom line. They went from having one quarter profitable in like decades to now having every single quarter in this year profitable on the bottom line. Now, this is just a projection and it hasn't happened yet, but the fact that management is so confident in this that they upgraded this recommendation is significant, and I think explains a lot about why everyone is talking about Palantir stock. In the current quarter, they delivered revenue of 525 million, which was 20 million ahead of the midpoint of their guidance. So it was 20 million better than what they were expecting for the quarter. In the first quarter, trailing 12-month revenue per customer from their top 20 customers increased 14% year over year to 51 million per customer. Now, you thought you had some strong clients. Think about Palantir. Their 20 top customers are averaging spending 51 million per year with Palantir. And the fact that they increased that spending 14% year over year means that they're getting a significant return on that investment, right? Otherwise, they wouldn't increase that investment. They would say, you know what, we spent all this money with you, Palantir, and we're not getting back a value that is sufficient to cover that spending. So we're going to reduce or we're going to move on to a different provider. That wasn't the case. They actually increased their spending with Palantir. That was impressive. New customer acquisition also remained strong as they saw their customer count grow by 41% year over year and 7% sequentially. That's been the big difficulty for Palantir has been to grow their customer count, the number of customers, because of what we talked about a little bit earlier. Given that they are so expensive, it's hard for them to attract new customers, but they were able to increase their customer count by 41% year over year. That's significant, and that's an area of huge growth potential for Palantir as more and more customers can sign on, and partly because Palantir is working to streamline their services and lower their cost to provide these services to enterprises. So as they're able to make progress on that front, more and more enterprises can afford Palantir's services, which can be a huge boom for Palantir long term. The US customer count grew by 50% year over year and 8% from the previous quarter, and that's the ninth consecutive quarter of sequential growth. The international business struggled a little bit, but it still grew 8% year over year. That's understandable given that the war in Ukraine and the persistent inflation in Europe has been much worse than the US economy. And so you can understand how businesses in Europe and other parts of the world are less inclined to spend money on this expensive undertaking given the uncertainty of the macroeconomy. TCV booked in the first quarter was 397 million. That was up 60% year over year. TCV is the total contract value. And this is important to understand, so I'll spend a moment to explain it here. Palantir signs customers, and let's say it signs a $100 million deal. Palantir will not recognize that $100 million contract as revenue immediately. So if that contract, let's say, spans 2 years, let's say it's a 2-year contract for 100 million, Palantir will spread out that 100 million over 24 months and recognize revenue monthly as it delivers the service. So contract value is important and is an indicator of Palantir's revenue over the next several quarters and several years. They ended the quarter with $3.4 billion in total remaining deal value and $936 million in remaining performance obligations. These will eventually turn into revenue as Palantir renders the service. It's a little bit like if you purchase a magazine subscription that's going to send you one magazine per month for the next 12 months, and let's say you pay $12 for that magazine subscription. That magazine company will recognize revenue $1 every month for the next 12 months as they deliver the magazine to you. The $12 will be remaining performance obligations for the company, and they'll recognize it on a monthly basis. Okay, so it's important to understand that difference, that when they sign a deal, they don't recognize it as revenue immediately, which is good news for Palantir stock investors, because now you know they've got a backlog of orders that they've already signed, and they just need to service those people, those clients that they've already signed the deal for. I will end with this final note here. The total remaining deal value and total value of their commercial contracts from the strategic investment program decreased by 102 million. That was due to the macroeconomic uncertainty that I noted earlier. Businesses and enterprises are a little bit more cautious with the outlook. They fear that there might be a recession in several economies around the world. They don't know how steep that recession is going to be. And so, they're more cautious. Instead of signing a 3-year contract, they might sign a 3-month contract with Palantir. Or instead of signing that contract right now, they might say, you know what, let's put this on pause for another 3, 6, or 9 months before we actually sign. We know we want to. We know your services are valuable. We know the return on investment is going to be enough to justify this spending. It's just we don't want to spend the $50 million up front right now and wait to recover, $5 million in benefits over the next 3 years or whatever the case might be. So they're pausing, they're delaying these investments. Eventually, though, I think Palantir will secure many of these that they've put on pause or delayed, because their services, apparently, from what I see in the evidence, their services deliver a return on investment that makes it worthwhile for enterprises and institutions. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.